Good morning, and thanks so much for tuning in to the trade setup on BloombergQuint. I'm Mathew. So, how are we looking at the end of the week? Let's start with the big talking point, and this has to do with the relief package that has been so long in coming in the US. It's been building up for some time already. Investors have moved past the Fed's policy meeting, and they're looking at the possibility of an imminent announcement of that deal. And that is essentially what will be watched over the course of today in the second half, as well as over the weekend. Why is that? Well, there are a few reasons for that. First, Senate Majority Leader Mitch McConnell has said that a bipartisan deal appears to be close at hand, but he has also said that work will likely be required over the weekend to get the deal through both chambers of Congress. There are a few niggling issues, but the thinking is that both Democrats and Republicans are keen to push this through. But most importantly, there's also a push to attach the pandemic relief plan to a $1.4 trillion bill that will essentially fund the federal government through to the end of the financial year for them, which is on the 30th of September. And that legislation has to be passed by today in the US in order to avert a partial government shutdown, unless another temporary bill can be used in the interim. So you could see a government shutdown, a partial government shutdown, but that has happened in the past, nothing to be worried about. Let's understand the context in which this is happening, because you have to look at all of this in the context of the current rate at which COVID-19 infections are rising in the US. Their daily increase is close to 2.5 lakh at the moment. And not just that, you also saw an unexpected spike in the jobless claims for last week. That was something that came in last night. It's not so great data. You'll see that the jobless claims rose by 23,000 to 885,000. But really, that only strengthens the expectations of a relief package, because clearly the COVID-19 pandemic, even though the vaccine has started getting used in the US, the COVID-19 pandemic is having quite the negative impact. And that's why US equities, because of that expectation of that relief, US equities climbed and held on to gains in yesterday's session. The Dow and the S&P 500 ended with gains of close to 0.5%, while the Nasdaq climbed over 0.8%. Those benchmarks in the US in and around the all-time high levels. In the Asia Pacific region, though, it's a mostly lower start to the end of the week. Losses widening for the early risers, particularly for the Nikkei 225 in Japan, and also the Hang Seng, last I checked, trading with cuts of as much as you can see on the screen, as much as 0.6% there. So it's a bit of a negative start for the Asian market. For the Indian markets also, it's looking like it could be a tepid start, with the SGX Nifty currently indicating cuts. Last I checked, has that still continued? Yes, it is about 0.2% in on the lower band right now, but we know that that is not necessarily how it will play out over the course of the session. And one reason for that has been, and will likely continue to be today, the flows from FIIs, which have continued to be strong. In yesterday's session, they added 2,355 crore rupees, even though DIs have continued selling. That whole bolstering of sentiment on account of the flows that are coming from FIIs has actually propelled markets into the green. And it's interesting to note that yesterday quite an important threshold was crossed. They have now pumped in over 1 lakh crore into India's equity markets in just 33 trading sessions that started on the 2nd of November. And you just have to pull up the line chart for the Sensex to tell you how the benchmarks have performed over that period. But let's talk about the trade setup. And we have to talk about it in the context of what happened on the weekly expiry yesterday. Benchmarks ended in the green despite more losses than gainers. We spoke about this yesterday, and that's because the HDFC twins were very strong in trade yesterday. They, along with Divi's Lab, which was the top gainer for the Nifty, and Reliance Industries, managed to keep the Nifty in the green despite a larger number of losers. Of course, on the broad base as well, in the broader markets, you had the market breadth that was favoring the losers, and all sector indices apart from the Nifty Bank, Realty, and Pharma underperformed, which brings us to today. So Is that relative underperformance for the sectoral indices likely to continue? Perhaps, because a lot of counters, especially on the larger side, are trading at close to 52-week high. So valuations, some would say, are a little stressed. But what is the key watching point today? And that is likely to be the IT pack as a whole. And that's because Accenture has reported better than expected earnings in the quarter ended November. Revenues rose 4% in dollar terms to $11.8 billion, better than expected. New bookings were 25% higher. Outsourcing revenues rose 8% in constant currency terms. And what's more important, and what likely will play a part for the IT companies in trade today, and that will boost sentiments, is the fact that the outlook for FY21 has been raised by Accenture, with revenue growth pegged at between 4 to 6% from the earlier estimate of 2 to 5% in constant currency terms. If you look at this, the business performance, there was strong growth witnessed in communications and financial services businesses, but the health business very clearly outperformed. So that is essentially what we're talking about at the start today. Watch out for the IT pack. You could see a few of the big names really active in trade today. Of course, you also have the TCS buyback that kicks off today. Remember, 16,000 crore rupees is what they have proposed to buy back at a price of 3,000 rupees per share, which is a significant upside to even the current price of 2,838. And that's despite the kind of run that TCS has had over the past month or so. All right, so that's the trade setup. Out of context, there is a piece of information that perhaps will be spoken about, not in the context of markets, but otherwise. The US Nuclear Weapons Agency and at least 3 states were hacked as part of a suspected Russian cyber attack that struck several federal government agencies. Now, it's been said that the hack has affected unclassified systems, so not too much damage, at least unofficially, that's what's being said. President Donald Trump has yet to publicly address the hack, but President-elect Joe Biden has said that he intends to make cybersecurity a top priority. So not necessarily referring to that directly, but incidentally saying that cybersecurity will be focused on by his administration. That's more or less the trade setup for the day, but clearly there's lots to talk about over the course of the day. So do stay tuned to BloombergQuint. You'll find all the news and updates right here.